Welcome back. You're watching Trading Hour here on CNBC TV18. Time to get in a fundamental view on the markets. Then Sunny Agarwal, the head of fundamental research at SBI Securities, is joining us now to discuss the road ahead for the market. Sunny, good morning. Thank you so much for joining in. Your views on the markets then, you are mentioning that the valuations as of now are neither cheap nor expensive. So where are you placed right now? In which bucket are you placed?
Yeah, good morning. I feel calendar year 23 was a robust year as far as returns from equity markets are concerned. Although we are trading close to life high, I think it's a time for consolidation. In terms of Nifty earning growth, what we expect is that for fiscal year 24, the EPS is for Nifty is likely to grow at 21%, and for 25, it is likely to grow at 17%. And if I talk about valuation multiple, Nifty is trading close to 19 times FY25 price to earning multiple. And historically, we have seen that average price to earning multiple has been in the band of 15 to 17. And still, I feel there is still headroom for Nifty to go up. We are still not in a euphoria zone. And as far as the opportunities are concerned, I think there are many sectors or stock-specific opportunity which exist in market for wealth creation during the next 12 to 18 months. So few sectors which we like for next 12 to 18 months are auto ancillary, cement, structural steel tube industries, basically manufacturing sector, jewelry, travel and tourism, along with the luggage and capital market as a theme. So these are the few sectors which we are bullish from a medium to long term perspective.
Okay. Sunny, just give us your sense on metals and if you perhaps find any reason behind the kind of rally that we're suddenly seeing on a lot of metal stocks, particularly ferrous stocks today. What is your stance on it?
Yeah, I think right now we have got a neutral view as far as metals are concerned, because we all know that it's a global cyclical play. And the way China is under trouble, I think we need to wait and watch as far as volume growth from all these metal companies are concerned. But having said that, I would like to ride this rally through metal products rather than pure play metal companies. So many structural steel tube companies like APL, Apollo Tube, or for that matter, JTL Industries, or for that matter, Good Luck Steel. So these are the few companies where we are seeing a rapid capacity expansion. And at the same time, the demand environment is pretty robust because of the capex of the government on water as well as oil and gas front. And what I feel is that over the next 2 to 3 years, all these companies will continue to deliver 20% plus kind of CAGR growth as far as the earnings are concerned. And as the share of value-added product increase, we will see a margin expansion also coming for all these companies. So one can ride this story through metal product. At the same time, another company, Usha Martin, which is again into a specialty rope business, they are into expansion mode, and I feel again a very robust business. Clocking 30,000 plus EBITDA per ton, 18% EBITDA margin. There also we have seen recently capacity going on stream to the tune of 47,000 metric ton. And I think again they are expanding their presence in international market. So I think these are the few companies which one can ride a metal sector directly, indirectly.
So one very interesting sector that you have highlighted as your topic is the capital market sector. Do AMCs feature in that list, Sunny, the HDFC AMCs and the angel ones and the kinds? What is your view on that space? And is there a specific bet that you are placing in that sector?
Yeah, definitely. What I feel is that the way we have seen ramp up in volume as far as the broking industry is concerned, coupled with a rapid increase in AUM for all the asset management companies. And at the same time, we are seeing a healthy AUM accretion for all the wealth managers like Nuvama, 361. So I think entire capital market sector is in sweet spot for if somebody has got a view from a 5 to 7 year perspective. And I think one can ride this story through Nuvama Wealth, again, kind of one of the undervalued company as far as the wealth management sector is concerned, trading at a relatively cheaper valuation. And on the broking front, again, although earnings are slightly cyclical as far as broking business are concerned, but I feel if somebody has got a slightly longer horizon, again, this is the place to be in, because till now we are close to 14 crore demat account, right? And there is a significant scope of still volume expansion on account of new demat account addition. At the same time, as the way new products, especially on FNO side, is getting traction, I think volume will keep on scaling up for all the broking businesses also. So I think one can write this story through brokers as well as AMC companies. On AMC, again, we all know that the penetration in economy is still low, and the AUM, which currently stands to close to 50 trillion rupees, can get doubled over the period of next 7 years. So I think all the asset management companies have got an operating leverage and will continue to deliver a healthy return over the period of next 5 to 7 years. So one stock pick which I would like to do over there is basically two, not one, UTI AMC and Nippon Asset Management Company.
Okay, so wealth managers, stockbrokers, and mutual fund companies. Your picks to play the upmarket in the capital market cycle. Thank you very much, Sunny, for joining, and good chatting with you today. We'll take a break on that note, come back on the other side, and we will have Pankaj Naik of India Ratings join in. India Ratings just yesterday released several reports on NBFCs, on the MFI sector, and even on banks. Basically, the outlook for the new fiscal that's about to start. So what is their outlook? We will chat with Pankaj in a bit.